can actually trade and make money on a consistent basis. Now, when I say that all 1.3 billion, what I am trying to tell you is, where is the Nifty right now? 8,900 somewhere. With 4% of population participating, it is at 8,900. If all 1.3 billion people are in the Nifty, in the market, where would the Nifty be? Probably more than 1 lakh. Now, why the Nifty is not at 1 lakh? Because 96% people are not in the market. Therefore, by not being in the market, they have brought the price down to 8,900. Have you understood? So each and every person, next time somebody meets on the bus, no, I don't trade, I am not in the market, you tell him this. By your not being in the market also, you are in the market. Because had you been in the market, you would have contributed a little bit, maybe 0.001 point to the market by your buying and selling. Because you are not in the market is 89. If all 1.3 billion people were in the market, if they were to buy mutual funds, if they were to buy insurance, whatever you buy mutual funds, you buy insurance, they all again in turn, where do they invest? Where do they invest? In the market. So directly or indirectly, everybody in any financial asset, whether it is they are buying gold, whether they are buying real estate, whether they are buying mutual funds, whether they are buying insurance, whether they are buying derivatives, or they are trading in stocks, they are directly or indirectly contributing to the market. And those that are not participating are also contributing by not participating, by keeping the Nifty level at 8,900. If all of them had gone into mutual funds, the mutual fund will be forced to take their money and buy, no? Where will they keep the money? In their house? No. They have to deploy it again in the market. So if 4% का 8% हो जाएगा, तो कितना हो जाएगा? Nifty will double, 100%. By now Nifty would have been at 17,000. Understand? So therefore, what is the prevailing emotion? Now, what is the information that you need to make money in the stock market? This is a question all market participants try to answer daily, right? All of us, when we start trading in the morning, would like to make money, and we would like to know what is that information that we need to make money. Am I right? This looks very easy, but it is not, because as I told you, the market has its own way of doing things. Alright? A stock will go up, down, frustrate you, and then finally move in the direction which you knew it would move. But after you have been removed from that stock, and frustrate you more. Now when it goes up, you buy, then from there it will come down. Again shake you. So therefore, you have to be patient with the market. You cannot fight the market. Now what is the information? You only need three things. When to enter, when to exit, and what is the stop loss to be kept. Now what is stop loss? It is a level, for example, if this is the support. In my earlier example I told you about Reliance. If suppose 900 is the support for Reliance, where every time it came and bounced on the charts, came, bounced, 3-4 times. You can see it on the chart, it came and then bounced. That, just below that would be your stop loss. Why? If 900 were to break, then Reliance is likely to go further much down to the next support, which could be 800, it could be 700, I don't know, just giving an example. Therefore, if you were to buy Reliance near to its support of 900 and put a stop loss just below 900 to protect yourself, you would make a small loss if your trade goes wrong. But if it goes correct, you are likely to make at least until the next resistance of 1000. So the way to trade is your stop loss to your target or exit strategy should be at least 3 times. That means if your stop loss is 10 points, your expected profit should be at least 30 points, right? But many people say we don't trade with stop loss. I don't agree. It's like driving a car without a brake. You can't only accelerate. You have to have a brake also. But then when you see something, you need to brake. Correct? You can't just go and bang into somebody, right? So when to enter the market, I was telling you even in fundamental analysis, when they enter the market will determine how quickly they recover the money. If it's a fundamentally good stock, yes, you keep today and after 5 years it will be higher. Agreed? But are you going to wait till 5 years every time? No. Right? So if you are to enter at the right time, your profit will come out faster. Where to exit? Again, same question. You entered at 900, you know that there is a resistance at 1000, right? It makes sense at least to take part of the profit at 100, at 1000 and wait to see whether that resistance is surpassed and it goes above that or it again comes down. So again, when to exit is an art. You ask any mutual fund manager, any, I can give you a guarantee, I'll give you in writing, has any stock broker or mutual fund agent ever asked you to sell? Has any mutual fund investment advisors, okay, have they ever asked you to sell? They only tell you buy. 9,000 Nifty, buy. 5,000 Nifty, buy. Have they ever asked you to sell? Please tell me, you invest in mutual funds? Has the mutual fund person told you, sir, अभी बहुत पैसा बन गया, थोड़ा निकाल लो? कभी बोला है? कभी नहीं बोले. They'll be out of work. If you start selling your mutual funds, what will they do? It is in their interest to keep you in the market. But you have to be careful to exit at the right time. Now I have given you a hint today. I am telling you right now, in spite of my telling, beyond 10,000, all of you will enter the market and get trapped. I can give you right now. I told you, after 10,000, any time the market can start correcting. I told you today, correct? Right? I'll tell you what is likely to happen. You'll remember this Dadiwala when it reaches 10,000, 100%. At that time, you are going to exit because I have put this challenge to you. After you exit, market will go to 10,500. Then you'll say, hey, idiot, you'll re-enter your book profit. Now you'll re-enter at 10,500. It will go to 10,600, 700. You will feel very great. Then from there it will start falling. You won't get a chance to exit. Again, I am telling you. Though I have told you, 10,000 के ऊपर आप please market से निकल जाओ. Close the market, take the money, put it in something else, put it in FD, don't look at the market, take a holiday. You will not do that. ये भी मैं आपको अभी बोल रहा हूँ. और अगर ऐसा होता है, please हमको कांटेक्ट करके बोले कि आपने जो बोला ऐसा ही हुआ है. ये भी मैं आपको अभी बोल रहा हूँ कि ये होने वाला है. क्यों होता है? ऐसे क्यों होता है? Because basically for trading for the day and on the Nifty. It is only for one instrument. Now, why do we lose money in the stock market? What makes it so difficult to predict the direction and levels to enter and exit from a position? Now, this is important. You may make profit once, you may make profit twice. What is important is you have to make it consistently. If you make 4 trades, out of that 2 are loss making and 2 are profit making, your net is 0. Ultimately you will be minus. But what I am trying to say is that what is important is consistency of profitable trades and controlling the loss in the loss making trades. That means if you make 3 times the money in a profitable trade, and in spite of that, even 3 times the stop loss gets triggered, you will still not lose money. If there is one profitable trade where you made 3 times the money and 3 trades where you lost money with your stop loss, if 1:3 is your ratio, you can have the luxury of making 3 loss making trades and still not lose overall money. Right? But what happens? There is one other emotion which is very, very, very common. One is greed, one is fear. What is the third emotion which is very common?
Love of the stock.
No. Hope.
No one wants
Hope.
to be loser.
अभी ऊपर आएगा. आता नहीं. Never trade with hope. There is no role for hope in trading. Okay, it's either buy or sell. Hope is no. Okay, so my system. So why people lose money? Because of the subjectivity involved in the interpretation of technical charts. Now, in my profession, there is a, we see ultrasound, X-ray or ECG. You show it to two doctors, there are chances that two may come with a different interpretation of the same ECG or the same ultrasound. Based on what? Their aptitude, their experience, their skill, their knowledge. The same thing in technical analysis. Two people seeing the same chart may come to different conclusions. Okay? Why? Because there is something called as subjectivity. Now, medical science, what attracted me to technical analysis, because it's very akin to our field. It is basically a study of mass psychology. It's nothing else. Nothing of economics involved. It's only psychology. So, what are they saying? Yeah, so there is a lot of subjectivity involved in interpretation of charts. Okay? It all depends upon each individual chartist interpretation of what he sees as a chart. Right? Therefore, what I feel, the market will go up, but if my interpretation is wrong, what is likely to happen? I am likely to lose money, right? The other is control of emotions. Now, as an investment advisor, I tell this gentleman, buy Reliance, this is the target, this is the stop loss, don't exit. I am more likely to make money for him than if I were to buy the same with my advice, trade myself. What is the difference? My money is involved when I trade with the same knowledge. Okay, when I tell him buy Reliance, put this stop loss and wait till this target. Now, chances are if he follows my advice word to word, he will end up making more money than me myself. Why? Because when I buy Reliance with the same knowledge, because my money is involved, what happens is my emotions come in play. I see a small profit and I take it. Then, as soon as I exit, Reliance goes up higher. Now I feel, array, I shouldn't have taken the profit. Now I jump back. When I jump back, from there it comes down. Now I am confused. Should I hold on? Then hope comes in. Then I hope that it will go up. Then I keep hoping. And then finally my stop loss gets triggered. And this person who doesn't know anything would have probably made more money with my advice than I myself. Why? Simply because I could not control my emotions. Why were the emotions not under control? Because it was my money involved. Therefore, subjectivity in interpretation of charts and keeping a control on one's emotions is very important as a trader to make money. My system tries to become objective. That means it doesn't allow or it reduces the subjectivity of interpretation because there are no charts. Okay? My system has no charts, only formulae. The decisions are objective and precise. There is a set of rules which one has to follow, ensuring that the effect of emotions is reduced to a minimum. Therefore, it adds a consistency of profitable trades to over 85%. Now, it can also, you see, I developed this basically for the Nifty, but some of my clients have used it for Bank Nifty, and now we have developed a software and we have also seen that it works for stocks also. Though I have not personally used it too much for stocks, I have used it for Nifty and Bank. Now, all available literature on day trading is only by foreign authors, and these are for foreign markets. There is no book, I can guarantee you, there is no book on day trading written by Indians for the Indian stock market. There is no book. Because I bought all the books and read all the books on day trading. There is no book. The only system and book that, in fact, I went to Jimmy with a book which I wrote for day trading. So he told me, very confusing, better you take a seminar because it's necessary to explain the system. So this is the only system designed, dedicated to Indian markets. So it's the only one of its kind in the world. Now analysis. But if you already have knowledge of technical analysis, it is going to be of use. Knowledge is never bad. Any kind of knowledge will always help you in life. Therefore, if you have knowledge of technical analysis, you can take a broader view. Like what I showed you, my view on the Nifty and outlook is because of my knowledge of technical analysis and Elliott wave patterns and everything. Okay? But you don't need to have, it's not compulsory to have knowledge to use my system. Safety is inbuilt in the system. That means it indicates the system is designed so that you will see, it's like this. If you don't lose money in the market, the money will make, you will make money. Correct? All systems are designed where you lose money and make money. My system is designed to